Hey, this is Keith with How to Build Your Own Home. We've got a great guest today. I've been watching his channel for some time. This is Simon with the Uneducated Economist, and we're going to get some good dialogue from him. And he's really a boots on the ground, upstream, totally upstream as to the market, especially in the trades and building, and especially with lumber. And we're going to talk a little bit about that. But I have a little bio about him. He's a popular YouTube channel with about 157,000 subscribers, and he positions himself as an economic view from a working class perspective. He emphasizes no formal education, which I can identify with, although I have lots of formal education. I tell people do not go to college. He has a boots on the ground approach. His videos tackle themes like inflation, tariffs, housing, material costs, and global finance with a thoughtful dialogue you will not find at the typical conference podium. Like me at the How to Build Your Own Home, he is a strong advocate for regenerating the transcendental movement of self-reliance and self-discovery. So welcome, Simon, with Uneducated Economist.
Wow, thank you, man. That was quite the introduction. I really appreciate it.
I'm a technical writer by trade, so I can't help myself. So that's
Yeah,
what
it was
my
great.
that's
I'm
my
going to totally
formal
take
one.
that.
Yeah, you can take that. It's you've got the actual hard copy on that. And we want to talk. First of all, tell us your background. I believe you're in the lumber industry, if I'm correct.
Yeah, that's correct. Essentially, I do retail sales at a local lumber yard here in the Pacific Northwest. I've been doing this pretty much my entire life. I got a job at a hardware store when I was 18 years old. I did take a little bit of time to go out there and actually do the construction work for probably about 3, 4 years steady doing framing. For a company that was building spec homes, so we did quite a bit of framing, siding, roofing, and that was kind of my area of construction. But for the most part, I spent most of my time in the retail space, selling building materials, and picked up this hobby of studying macroeconomics, and then combined the two and put it together into a YouTube channel. And really, a lot of people love that perspective, and it's growing quite big.
Yeah, I highly recommend you go to his channel. I'll send a link and put a link down at the bottom of this video. Check out his channel. I like him probably the best in my field because he's really upstream. He is in the lumber industry. So that there is one of the biggest ticket items for construction. And a lot of people are asking, what's the cost of lumber? What's the cost of lumber? And so I always go to his channel to check that out. Any thoughts before we kind of dive in? I know a lot of people would be interested to know right away what your thoughts are with regard to lumber and the futures and at the present as well.
Yeah. Lumber's cheap, right? Lumber's cheap on the market right now. Now, if you go back over historical averages, you're going to see that at 650 per thousand, that is quite high, and that was the high back prior to COVID. But considering all the things that have happened within the global economic market, having lumber at 650 per thousand really to me is a very cheap price. Now, when we think about the demand versus supply, over the last few years, we have had quite a bit of pushback or pullback, I'm sorry, in the supply that is available out there. A lot of mill curtailments, a lot of inventory depletion, and not a lot of demand coming from the builder side of things, considering the higher inflation and higher interest rates, and buyer traffic has been, really depleted. The combination of these has put a very clouded, dark damper over the lumber industry. So, right now, in my opinion, we have a very low supply, very low mill activity, and we have a low demand. If we have any pickup in demand from the builder side of things, I really feel that lumber is going to take off because there's simply just not enough supply out there to meet any kind of significant demand. So, in my opinion, right now, lumber is about as cheap as you're going to see it.
Yeah, it is. It's what is it, like 28 or close to 30% below the COVID high, something like that.
Well, the COVID high, like, was better than 1650 per thousand, so $1,650 per thousand board feet. Today it's 650. So I don't know, it's a third of the price.
Yeah.
Yeah.
Yeah. It's that's why I tell a lot of students that lumber's really lower than what it's been in a couple of years.
Yeah.
And if interest rates, we'll talk about that in a little bit. If interest rates drop a point, oh my gosh, it's crazy. You'll see people going out to build, and I gotta do it now, and that's the problem with interest rates. And I don't like to follow interest rates, and we can talk a little bit about that. A couple of questions here, and we can kind of have some fun. How would you describe the current economy? Stagflationary, manipulated, or it should never bother the self-aware and prepared?
Yes. Um, so, yes, it's manipulated, but it's not in the way that a lot of people think it is. Ultimately, I believe that we have an economy that is far less restricted than anybody had ever given any kind of consideration for. So, when we think about elevated interest rates, we think that's a restricted economy. And so, typically, if we look at Economics 101, high interest rates, slow economy, less consuming, stuff like that happening. You lower the interest rates, people want to take advantage of that, go out there, buy houses, cars, go on vacation. So when you lower interest rates, this sparks consumption. Raising interest rates, that slows consumption down. Something very interesting that isn't really discussed out there a whole lot, but when you start diving into the monetary policy of the Federal Reserve, they start discussing something called the neutral interest rate. And that's when the Federal Reserve is neither accommodating nor restricting the economy. It's when they are sitting at neutral. The only problem with this neutral interest rate is it's not observed in real time. So if you don't look at the neutral interest rate in real time, you have to assume, okay, which direction is this neutral interest rate going? Now, if you have elevated inflation expectations, not only are you going to expect to pay a higher price for things, but then you're also going to demand a higher return on your capital investments. And between these two expectations, it will begin to pull the neutral interest rate higher. Something very interesting that starts to take place over time is if you have a stagnant Federal Reserve who is standing still and a neutral interest rate that is rising on ever increasing amounts of inflation expectation, the economy becomes less and less and less restricted because that neutral interest rate is moving ever closer to the Fed funds rate. It could actually get to the point where it would even become neutral itself, where the Federal Reserve hadn't even moved. So now, as people are assuming a restricted economy because of the elevated interest rates, the idea of tariffs and the expectation of elevated inflation is going to raise that neutral interest rate, making the economy less restricted. And I think that's really more of what's happening today. This is why we're finding such a resilient economy with markets at all-time highs and a labor market that seems to be resilient, although it is weakening. People question why it is that this is happening, and I don't really question it anymore as I watch this take place. And it's not me assuming it. I mean, we can go back and look at Michelle Bowman's speech, I think is what it was. I can't remember exactly. I have a list of them in here in front of me. But she even said it not too long ago. Yeah, right here. It says the target range now reflects 100 basis point cuts since September, and the policy rate is now closer to my estimates of neutral level, which is higher than before the pandemic. And now this was coming out of Michelle Bowman, who is very influential on the FOMC, who is the Federal Open Market Committee. These are the people who vote on monetary policy. So she's very impactful and very influential there. And this was a speech that was given January 9th of 2025. So we can just think about it. 6, 7, 8 months ago, they were sitting almost in a neutral position. Here we are today.
So can you explain that neutral position as
Mm-hmm.
is it a percentage or what quantifies it as a neutral position?
Well, the neutral interest rate is when the Federal Reserve is neither accommodating nor restricting the economy,
Okay.
right? So it's not something that they control or they deal with as far as like, let's position the neutral interest rate. That's not something that they have any real control over. In fact, they were losing the ability to even deal with their monetary policy in an effective way by lowering interest rates because that neutral interest rate had become very close to zero
Oh,
over
okay.
the previous 25 years. So when they hit that lower bound of zero, they were barely below neutral. And they couldn't really stimulate the economy with that lowering interest rates. This is why they fired up the quantitative
Oh,
easing one, two, three, and four to try and spark the spark the
Because
inflationary.
they don't have an ability to go below the lower bound.
They
Not
can't get
right
below
now.
zero, right? Well, I mean, they could, you can go into negative interest rates, but then that starts creating a whole nother economic problem of like people not wanting to keep their
They
cash in the
need
bank. And
programmable money to do that.
exactly, you would need to be able to go into a cashless society to prevent people from pulling their money out of the banking system
Okay.
and forcing them to actually deploy it into markets or CDs or something of that nature.
So it's almost like they've given up trying to go higher or lower. It's just like it's just high forever.
In my opinion, what we are now facing is a situation in which the Federal Reserve is not as likely to adjust their interest rates as much as they are to try and put the impression into the markets in order to get the markets to conduct themselves in a way that is appropriate for the Federal Reserve's monetary policy. And I know that sounds really weird, but ultimately, if you think about gaslighting, that's what they're doing, right? So if they put out this, what they call forward guidance, well, or signaling, jawboning, or what I like to refer to as credible threats, then they can put an impression out there into the markets to start getting the financial conditions in a way that's more aligned with what it is that they are looking for. So again, if you can push an inflation expectation, higher tariffs, Powell doesn't know what he's doing. He's too late, screwed up, all this other stuff, and you put this fear and anxiety and uncertainty into the people, then you'll start seeing the inflation expectation rise. But look at the reality of the situation. I mean, although you can't really necessarily trust government numbers, what do you see coming from like the CPI and stuff like that? You see these numbers coming down. So here we are moderately above 2%, but yet the inflation expectation is quite high. Now, this is a scenario that actually works out very swimmingly perfect for the Federal Reserve's monetary policy, as they have an economy that is far less restricted with a low inflation. It's like, yeah, no wonder why we have a resilient economy. And we also have to think like this isn't an economy that is designed around 80% of the people. It's only designed for 20% of the people. I mean, at least their efforts, I should say. It's not a design, it's more of like this evolvement into this condition. And the problem was is that originally it was conditioned to deal with consuming, right? So if they can increase consumption, then that's going to be what's pushing the economy. But the problem with consuming is that it's only down to the top 20% who are doing like 70% of the consumption. So if you have a consumer-based economy, 80% of the people literally are just not important to the idea of pushing consumption, which is at the top 20%. And this is why most people feel like they are being left behind or they're
Yeah.
not included or anything, is because that's literally they're not.
Well, what I'm finding to be very interesting is I've been in the trades now for as a builder for 24 years. And right now, contrary to the market sentiment out there, right now is actually a very good time to build. Why? Labor costs are soft. That's 30 to 40% of the total cost to build. Material costs are between 50 to 60% of the cost to build. They flatline, and especially with some of them, they've come down compared to what they were 2, 3 years ago. And then if you're an owner builder, you can cut off 10 to 23% on a builder fee. Right now, if you're an owner builder, I have not seen a better time, despite interest rates. I have not seen a better time to build because it would be terrible to have high interest rates and high everything else. And you can't get everything perfect at the right time. It's just, I've never seen it where you got low interest rate, low material costs, and low labor costs. You have to pick and choose. And if you have a flatlining or lower material costs and a soft labor market, your cream rises to the top, and now you have the opportunity to find good people to do stuff. People couldn't find anybody to build or to do anything on their projects when we had that boom just 2, 3 years ago. It was nuts. It was the biggest complaint they had. I can't find anyone who will give me a bid. Now it's the opposite. I'm getting a lot of subcontractors calling me all the time. Hey, do you have any work for me? I can bid on stuff. Let me know. I get a dozen calls a week right now on that.
Yeah.
Question I have for you is are we facing inflation down the road?
Oh, absolutely. There's no other, it's baked into the cake. There's no doubt about it. Inflation is something that is going to be a constant into the future, the problem that we are going to face is that the Federal Reserve is scared not to find it. And that's so weird, right? Because most people are scared of inflation.
Mhm.
The Federal Reserve is scared of deflation, right? And so now we're here, and everything seems opposite in the world. And I know this is to be true, but like just like anything, like our asset is their liability, right? Like the
Mhm.
money that we have, if we have dollars in our hand, that's the Federal Reserve's liability. So when we look at our assets, they are looking at our assets as their liabilities. Everything is opposite. And once you start thinking about it in this way, it starts to become a lot different. So, like, I'm sorry, what was back to your original question?
Um, um, a lot of people are waiting for either an interest rate to drop,
Right.
but they don't know that that's going to cause massive inflation.
Right. Oh, the inflation part of things. Right. So, okay. So here's the thing. Let's take it back a little bit because a lot of people want to just look at money printer and say that's inflation, right? When the
Right.
money printer go off, inflation goes up, and it's just like wash your hands of it. Don't need to know anymore. But we face a problem with this idea when you think about quantitative easing one, two, three, and four failed to produce an inflationary scenario that the Federal Reserve was looking for. They were consistently under that 2% target that they were trying to achieve. Right. So here they took their balance sheet of $850 billion to over $4.5 trillion and failed to produce an inflationary scenario within the economy that they were looking for. Now, when I think about why this is because, well, if you expand the big bank's balance sheet and all this money ends up on this balance sheet of the big banks and never gets lent into the system, then it doesn't really chase the goods and services. But then you think about what it does get lent to: houses, stocks, bonds, right? You start seeing these assets start to move up dramatically, but yet the regular cost of living or standard of living kind of things, those expenses didn't really keep pace with the asset prices that were going up. So again, the problem with this: labor, right? So your wages don't keep up with those asset prices as well. So now here this wedge gets driven from all this, and now people just want to focus in on those asset prices and say, well, there's the inflation. It was like, yeah, but that's not the inflation that necessarily the Federal Reserve was hoping to get throughout the rest of the economy, because they need wages to go up and everything else to keep the consuming happening within the 80% of the people. But that's getting lost now, right?
Mhm.
Because all this effort that goes into it is no longer benefiting the 80%. It really only benefits the top 20%. So are we going to have inflation? Yeah, absolutely. It's going to look like a wedge being driven between the rich and the poor. And that's going to continue going into the future because, again, it's the Federal Reserve who is absolutely scared of deflation. So they are going to do everything they absolutely can to create an inflationary scenario. So it's absolutely baked into the cake that they will have inflation. If they don't, then the whole thing starts to come undone.
What will be some of the trigger points for creating that inflation?
Well, here's the thing. Like sometimes I wonder if the Federal, like this is going to really blow a lot of people's minds. Sometimes I wonder if the Federal Reserve can even print at a pace that is fast enough to create the inflationary scenario that they are looking for. And now I know this is really blowing people's minds to hear because we just got off of this huge inflationary scenario through the COVID. But most people look at the printer of the money printer as the inflationary portion of COVID when really it was supply chain breakdown. Now I can be very adamant about this because I called it out way ahead of prices of lumber coming down. When it was at its all-time high and people are screaming, the Federal Reserve is creating inflation, just look at lumber. And I said, it's going to go back down to normal and all you people are going to have no idea why. And then it happened.
Mhm.
So I know that I was right. I know that that moment when I was calling out lumber at its all-time high and saying that it's going to go back down to its normal price and nobody's going to be able to explain why. It's because it's a supply chain breakdown and lumber is one almost a 100% domestically supplied product. We can do it ourselves. We bring in a good portion from Canada, which keeps the prices low, but we can provide all the lumber we need right here domestically. It's a very well established, well functioning, brought that supply chain right back into production, and it brought the lumber prices down. So I know that the money printer was not the cause as much as it was the supply chain breakdown. So now when I look at the Federal Reserve and how it is that they are going to try and deal with the fact that they have a liquidity crisis coming to their hands. And now this has to do with more of a global crisis than it does with the domestic thing. Doesn't have to do with our government, doesn't have to do with our banks, doesn't have to do with our people or nothing, corporations. It's not an American problem here. This is a global issue of writing debts that are due in dollars. And now this has, again, nothing to do with the United States. There's a great document from the Federal Reserve called Dollar Funding Stresses in China. And it's a pretty long document, but it explains this very well on how debts that are due outside of the United States coming due will then start creating a demand for dollars that the Federal Reserve may not be able to provide enough liquidity to fill. And
Wow.
that will start driving the demand for dollars way up. And of course, if the dollar strengthens, what happens, right? Prices start to go down. This is a deflationary scenario that the Federal Reserve is so scared about. You know how scared they are of this? This is something that Ben Bernanke actually brought up in a speech back in 2002. So this is over 23 years ago that they knew about this situation coming. See, here, let me just read you this little bit right here. Because they're talking about how to inject money into the system. It says here the Fed can inject money into the economy in still other ways. For example, the Fed has the authority to buy foreign government debt as well as domestic government debt. Potentially, this class of asset offers a huge scope for the Fed's operations and or as the quantity of foreign assets eligible for purchase by the Fed is several times the stock of U.S. government debt. So now when I think about the Federal Reserve buying up all this U.S. Treasury debt, they're essentially sending the United States on an unsustainable debt path, right? They cannot continue to buy this stuff and doing this to the government. But however, if all these demand for dollars starts to increase from this dollar funding stresses outside of the United States due to these contracts that were written by entities that don't have anything to do with us, the Fed has to come up with these liabilities to provide to the world, the liquidity. They got to get it out there somehow. And if they are in huge demand of these dollars out there because of these contracts, and the Fed is looking at the treasuries going, I can't buy those anymore, they're going to have to start buying foreign government debt. Now, how does that look, right?
Wow.
Putting foreign government debt on the Fed's balance sheet. How many people discuss this? Very few. But yet, Ben Bernanke brought this up as one of the main ways of dealing with the fact that they are failing, that they already have the illegal authority to do it.
So they want to avoid a deflationary crash on a
That's right.
already, and that's the real risk they're facing. They don't care about inflation because
No,
that just protects the bottom line of a lot of other balance sheets out there, is making sure that they push for inflation.
yep. They need inflation. They needed inflation to be elevated to pull the neutral interest rate off that lower bound to zero.
Mhm.
If you can pull that neutral interest rate from the lower bound to zero and you get that to be elevated, and especially if you can get it to, like where they are today, now if they do run into crisis situation, a recession, they can drop back down to the lower bound and be significantly below the neutral interest rate to attempt to stimulate the economy.
Mhm.
Right. But then their ammo's gone.
But
That's it.
that's like a
And
six
they're back to
or
where
18-month delay, and that's the problem the Fed has is they don't have an immediate impact on the markets. That's why they want to go below the zero bound. Why don't you explain to people what the zero bound is so they can kind of understand what that means?
okay. So essentially, the lower bound is zero, is when the Fed funds rate gets to zero. So the Fed funds rate is the overnight lending rate between the big banks. And to explain it simply, because a lot of people think, well, the Fed is in charge of mortgage rates or in charge of U.S. Treasury rates. That's not true, right? What they're in charge of is it's called the effective fund rate, and it's an overnight lending rate between the big banks. So to understand the Fed funds rate, it's better to understand how they used to operate, and then it changed recently into a new operation. But if you can understand it the old way, it makes it easier to understand the new way as well. So essentially, at the end of the day, the banks were in what they refer to as a limited reserve system. So there was so many reserves out there, and the banks needed to have a certain amount of reserves on their balance sheet by the end of the night in order to do operations the next day. At the end of the day, some banks would have excess reserves. Some of them would be in need of reserves. The excess reserves would get lent to the ones who were in need of reserves, and that overnight lending rate was the effective fund rate. The
Okay.
Federal Reserve would buy and sell treasuries off these banks in order to adjust the levels of reserves on these big banks in order to target that effective fund rate to be what it is that they were shooting for. Because the Fed funds rate is like a target on the wall. They're like, here, this is what we're shooting for, boys, right there. Okay. The effective fund rate is that overnight lending rate.
Okay.
So now what happened was is back in September of 2019, something very interesting took place in that overnight lending rate shot up to like 10%, right? And the Federal Reserve stepped up and they were like, oh no, no way. We'll fire up this repo facility. You guys are loaded with a bunch of treasuries. We'll take those treasuries off your hands and we'll hand you a bunch of cash. Because see, what ends up happening is that the banks are sitting on treasuries and cash. And now treasuries can be kind of like cash. They can be used like cash. Essentially, they get looked at cash, but then at some point, cash is needed to fulfill the contract, right? So cash is like the lubrication for the system. And if there's not enough cash in the system, the demand for cash starts to really increase. So in September of 2019, the government was doing a lot of spending. The big banks like JP Morgan, Goldman Sachs, these are the primary dealers. They have to buy these treasuries from the government. They have them on their balance sheet. They didn't have a lot of cash. A huge tax payment was made, corporate tax payment. It took this cash away from the banks, sent it over to the Treasury General account, which is an account at the Federal Reserve, depleting the amount of cash that was in the big banks. That's when the Federal Reserve stepped up with the repo and said, okay, you guys been doing a lot of government purchasing of debt. We'll take those treasuries. Here's the cash. We'll flip this every day. We'll call it, repo facility. What do they call it? Non-QE, right? That's what the name, they didn't call it that. The market started calling it that, right? And so now when we think about it, here now the Federal Reserve has taken away the effective fund rate from the overnight lending and now move that over to the repo facility. So now the repo facility is where the effective fund rate is now targeted at. Right? So this is the change that has essentially taken place with the Federal Reserve. Now they also have another account there called interest on excess reserves, right? So this is an account that has like the worst interest rate that a bank could ever possibly go for. And then there's the repo facility, where most of the banks go to with their excess liquidities. This right here channeled the Fed funds rate. So now the effective fund rate is channeled at the repo facility and the interest on excess reserves.
Okay. So
Okay?
what you're
Now,
basically talking about is increasing liquidity and decreasing liquidity at
that's
various
it.
points. So owner builders out there, one of the biggest issues they've had, I know 3 years ago, it was easier for them to get a loan. Now that liquidity has shrunk quite a bit.
Right.
And so
And so,
go
and
ahead.
again, like if you think about it, so here the Federal Reserve, if they were operating out of the lower bound of zero, like it's very difficult to try and keep liquidity flowing through the system when people are not getting a return on their interest, right? So
Right.
if you have low inflation expectations, not a problem, right? Because people don't expect a whole lot of return on their capital investments to protect themselves from inflation. So people will be willing to deposit their money into a low interest carrying account. But the moment that you have elevated inflation, now there goes the liquidity, right? Because now they want a higher return on it. This is why mortgage rates go up. This is why the U.S. Treasuries go up.
Right.
Is because people are fearful of their deploying their money into the future and not getting enough of a purchasing power off of it. So they demand a higher return. So this is really where the market ends up starting to establish these interest rates. And the Federal Reserve, again, they're just dealing with the overnight lending rate and liquidity levels. That's it. Everything else is market participation. So even the mortgage rates themselves, we have to think about this. Where do the mortgage rates get established? Well, they get established in the mortgage-backed security market. So whoever's purchasing mortgage-backed securities, they're the ones who are demanding a certain yield off of that bond, right? So a mortgage-backed security is like a group of mortgages that everybody's putting into a box and the investor buys it. It's more complicated than that because it gets chopped up into tranches and stuff. But to think about it in this fashion is that this box is an investment that people want to buy. They want to buy all these mortgages because they know that the homeowners are going to pay them, and then they can get the return on that investment. So now when you start seeing the bonds start to fall because people are like, ooh, man, we got crisis coming, housing market crash, we got all these issues, and the bond price starts to fall, these mortgage-backed securities, all of a sudden there's an investor who goes, boom, that's my price. I'm in, right? I'm looking for a fixed income. I'm into buying real estate. I'm into buying mortgages, and that's my price. And they start buying these mortgages, right? Well, this caps the
Like
yields.
they're almost shorting it in a way.
Well, yeah, and this caps the yield. So as people are thinking 15% interest rates on mortgages and stuff, and I'm thinking, well, don't you think that the investor might want to jump into the game before that happens in order to get the yield off of that investment? I mean, the bond market is just open to everybody else, just like it is the Federal Reserve or, you, me, or
It
anybody.
seems like
So
it seems like the only route to go for the Fed and for all the other parties involved is to increase interest rates.
the elevated interest rates is by far the absolute like necessity that the Federal Reserve needed to save their policy.
Mhm.
They were so desperate for something. They were running out. Like if you okay, so back to the lower bound, that Fed funds rate, right? When it hit zero, like how is it that you're going to take interest rates lower to spark investment, to spark consumer demand? See, really, to understand the Fed and how they really would create inflation is that they would try to get people working or not working. So they had a neutral employment rate, if you can believe that. Like
Right.
their Fed funds rate is neutral. They also had a neutral employment rate. So if they lowered interest rates, they could get people to go out there and buy houses, cars, and go on vacation, but they could also get businesses to start investing as well, which would then get employment to start into would increase. So if they had unemployment rising, lowering interest rates would hopefully spark that investment into from corporations to start hiring people. If you start hiring people, more people working, getting money, consuming, inflationary pressures start to come from the supply demand imbalances of that. So the Federal Reserve would really try to target inflation by targeting employment. If they can get more people working, they could increase inflation. If unemployment rises, they could lower inflation.
Mhm.
Here's the problem that they faced with it is that when they hit the lower bound of zero or came very close to it, unemployment also began to fall really
Wow.
low. You think about it to like the Obama administration all the way through the Trump administration into COVID, historically low unemployment. In fact, Trump bragged it up big time in his administration that it was like the best jobs
Well, they
numbers in
gave
the
all
world.
that free money too, and that really
Right?
affected it.
But you think about it, if the Federal Reserve is trying to create an inflationary scenario by lowering the unemployment as much as they can, and it was failing them, think about that for a bit. If they lowered unemployment, they had historically low unemployment, and Trump is screaming, there's no inflation. The Fed should be printing money, right? He was saying this back in 2018.
Hmm. He's saying
And
it.
so now I think to myself, I'm like, holy crap, that's the Fed failing. That's the Fed failing right there. They got historically low unemployment and they could not find the inflationary scenario because of it. That's the problem with the
Wow.
lower bound of zero.
Yeah,
It
it's just
doesn't,
it's the problem is there's just so much we're trying to shut off globalization, but at the same time we're insinuating this homegrown inflationary problem at the
yeah.
same time because there's nowhere cheap to send labor anymore.
Well, and that's just the thing. It's not like I don't think it's necessarily that there's no place to send labor to anymore. I think it's just kind of baked into the idea of like the Cantillon effect that labor is going to find the cheapest places to manufacture. And that's what we end up facing here. is that most of our production and effort and stuff that we would bring new money in with.
Mhm.
So just like anything, if you're an industrious person bringing in new money, you get new money, you start increasing your standard of living. Well, we were a productive nation producing the world's greatest stuff, sending that out there to the world, and the world was sending us their money. But we don't operate in like that fashion anymore. Right? So we're not producers savers, we're debtor consumers.
Right.
And the debtor consumers is now consuming is at the top, right? Everybody else is a slave debtor trying to pay for their car, pay for their house, pay for their, stuff by going to work every single day and really having nothing as a return from it, where other people are out there taking their money and putting it towards, return on capital investments of rental properties, dividend paying stocks, something of that nature. And so now between these two, this wedge is getting driven quite dramatically. I don't know what it is that could possibly fix the situation, except for like people in the bottom half to really be aware of the situation, understanding that it is now a desperate position that they need to take in order to acquire the things that they need to put them on the other side of that wedge. And that's like literally cash flowing assets, rental properties, dividend paying stocks, something of that nature, businesses that you can start, these ideas, because the regular average day job will never be enough anymore. It just simply can't. It's just,
There's no way it will ever be enough.
it,
I've been trying to tell a lot of my students that when you design a home, try to create a situation where there's an ADU connected to it or to the side of it. I'm doing that for a client right now. Well, she'll have an ADU connected to her home and she'll have 1,200, 1,400 a month. Within a month or two after she gets the CO and she can rent that out. If you can't create revenue through even your own home, you're falling behind. And you have
mhm,
to have more than one revenue stream these days. It just can't be just one income. I heard a very wealthy man of a company in my community. It's well known nationwide. And he says the most successful families are those that have up to four revenue streams. And if you can't think like that, you're really gonna struggle. And I was a contractor and I started making Facebook posts and helping people with building their own home. And lo and behold, one student calls me. Hey, I'm just down in town. We're moving to Oregon up by where you live. We're going to take a job there, but we have to build our own home. Can you help us? So I met her and I said, yeah, sure. And what will it cost after meeting them? And I said, I'll just give you everything I got for about 800 bucks. And great, gave her checklists, draw sheets, subcontractor agreements, all the stuff she ever needed. And within another month, I had two more clients. And I said, oh my gosh, this is a
yeah,
business.
yeah,
And I started helping more and more students and put all my teaching together with everything I knew about construction. It's now a website, how to build your own home. And
amazing.
that second revenue, that second uh, um, value that I created launched into so many other different things, grew my business substantially as well because I get billed jobs from my YouTube channel. And so if you can't start thinking in terms of what can I do to create a secondary revenue stream in the easiest way I possibly can, that's where we have to start thinking. You were talking about that yesterday in yesterday's post.
Yeah. Yeah. Oh, absolutely. Like, this is the thing. I mean, it was really simple. I saw it. I was vacationing in Hawaii. It says there's two, I saw it on a t shirt. It said there's two paths to wealth: earn more or require less. Right. And so that's pretty simple, right? I mean, that's a pretty simple philosophy: earn more or require less. So when I think about requiring less, I think about that deeply. Like, I have a 97 Suburban I drive. I got a 99 Explorer over there. I got a 2001 S10. These are my vehicles. Now
Mhm.
I could go and buy a brand new Silverado, which I really want. Like, don't get me wrong, I really want one. Right? But I also, in this meantime, since getting out of debt and building this YouTube channel and doing all this other stuff, I've built up $100,000 worth of assets, which is just mind blowing to me, considering that I had absolutely nothing at 40 years old.
Mhm.
Right. So now my whole thought process the entire time was keep your expenses low, bro. Right. The
Yeah.
entire time. Don't go into debt. Don't go like crazy and try and earn a lot of money. Okay? And now when I thought about earning a lot of money, I didn't know what a lot was. right? Like
Right.
to me, a lot of money was $1,000 because I didn't have any money,
Mm.
So like earning $1,000 to me was like, wow, like that's a lot. I stepped off into the idea of like, what is it that I could do out there to possibly make money? And I'm chasing like, working landscaping jobs. I'm doing all kinds of odd job things, to bring in little pieces here and there. It kind of helps out with the bills occasionally. I found a steady side hustle where I'm calling bingo at the tavern, and that was pretty cool. I had a lot of fun doing that. It was when I started the YouTube channel that I realized, holy crap, I can put some effort and then it goes makes money. That's the ticket right there, right? The
Mm.
day that I built up the YouTube channel like quite by accident. I had no idea it was going to take off. Like literally, I started the YouTube channel. I'll tell you, tell your viewers like this. I was at work. I'm babbling on about the economy, and this tall girl, Brittany, who like farm girl, rides horses, kind. She comes, she puts her defense fist on my desk. She says, "Listen, you're gonna have to start a blog or a YouTube channel or something because nobody here understands what you're talking about, and you are driving us crazy." And I went, "Oh, right, Brittany, I hear you." So I literally grabbed. I had an iPhone 6 that I had purchased for $100. It was used, right? This used iPhone 6. I went down to my old Oldsmobile Aurora that like a $800 car or something that I was driving. I said, I'm going to start this YouTube channel, The Uneducated Economist, to help out my friends and family understand the economy. Uploaded it to YouTube, went back into work, used works Wi-Fi, right? Uploaded the video to YouTube, and The Uneducated Economist was born, right? So boom, here I am. I'm making videos. Nobody's watching them. Like, nobody's watching my videos. My mom, my sister, like they're watching my videos. And I start talking about lumber and building supplies in the housing market. And all of a sudden, boom, my videos are very attractive to a bunch of people, right? So now all of a sudden, I'm getting a bunch of people who are watching my videos, and the subscribers are starting to build up. And I'm thinking, oh man, this is too much. I got to cancel my channel. I'm going to delete it, right? It is too much attention. I can't handle this. My wife was just like, "What are you talking about? Everybody knows who you are anyway." I'm like, "Yeah, you're right." So I just continued on making the channel. Well, it kept growing, and I realized at one point, I'm like, "Holy crap, this thing is getting subscribers like every day. I have a product here. Holy moly!" Like I've never really had anything in my life. I mean, I'm 40 years old. I just given up alcohol. Like I've been sober for maybe like a year or something like that. I'm thousands and thousands of dollars in debt on credit cards and all kinds of crap and stuff out there. And I got this YouTube channel and I realized, man, I got something going here. I get to 1,500 subscribers. I apply for partnership. I get the partnership approval. I get the AdSense revenue going, and my video makes $1. And I went, oh man, this is so incredible. And I mean, out of all the efforts, I mean, I've done stuff. I did a roofing job where I made $1,200 in 2 days and stuff like that. But this just blew me. I was like so excited. I was like, holy moly, this is it, man. This is something. Because I bet you I can make $2 off a video, right? Bet you I can make four, and I bet you I can make eight, right? And so I kept pushing the videos, and it was so exciting. And the viewers were like, really, it was my viewers and their encouragement through the comment section that just really drove me, right? So I'm out there just doing as much research. I'm like studying, reading 3, 6, 7, 8 hours a day to come up with videos and come up with ideas and stuff. And I'm just like, I have no idea what I'm doing. So I'm just like recording video after video after video after video, doing take after take after take, spending hours doing these practice videos before I'd finally agree to one because I would not edit anything. Like I wanted to do a video from beginning to end without edits. And the more I practiced, the more I did it, and the more the channel grew, and the more the revenue came in, and the more I was paying off my debts, and the more the savings I got, the more I realized, holy shit, this is really happening. This is actually going down. Like I am going to be a real YouTuber. Like this is like I'm making the money, I'm doing the whole thing. Meeting like guys like George Gammon, who invited me down to the Rebel Capitalist and all kinds of stuff. But I'm sitting there and I'm like, I can't believe this actually worked. Right? Like that's what really blew me away. And so I go back and I tell people, it was like, man, I can't believe it worked. I'm so lucky. And my wife says, that ain't luck. She looks at me and she was just like, do you have any idea how many hours you spent researching? How many hours you spent practicing those videos? How many hours you invested into building that YouTube channel
Right.
before it ever did a thing?
I did a
You
video
know,
on
it
my
was like,
live chat yesterday and we talked about luck. And my house, all the homes around me burnt down. You can kind of see out that window there. All 12 homes around me burnt down. And
oh,
people would drive by and say, boy, you're lucky. I go, there's probably a little bit of luck, but there's probably about 85% that's preparation and good building science. And so people don't understand that. And I'm almost tempted to launch another channel. I've actually got some posts that I've done already called How to Be a Contractor. And this not just for being a general contractor, to be a subcontractor, to be an independent contractor. Everyone has something that they've studied, learned, figured out, skill set, knowledge. I don't care what it is. And we don't realize its value. That people just don't realize its value. And so I want to help people. We need more independent minded people because the great discrepancy in America right now is you have some areas that are kind of rural, less populated areas, highly dense populated areas. And the real difference between those two areas is that in the highly populated areas, it could be LA, it could be Boston, Chicago, I don't care where it is, the ratio of business owners to employees is almost 12 to 14 to 1. But if you go in less populated areas, that ratio drops to almost 6 to 1. So you have more independent owners in less populated areas, rural areas, and just the reverse in highly populated areas. That's what creates the political divide we have in this country. More dependency in highly populated areas and more independence in less populated areas. And when you have a path that chooses entrepreneurism or more independence, you now have, you're not politically confined. You can actually express what you feel. You're more inclined to vote. You're more astute as to, oh my gosh, that's going to cost that much. I better conserve and not waste anymore. You think entirely differently. And yet that whole spectrum has been called selfish or it's been called whatever it is by the, again, highly populated areas. But we need more people to choose to be a contractor, to be an independent contractor, to sell your skill, trade, knowledge and not be afraid to do that.
oh, absolutely. In fact, I'm coming to kind of the understanding that if you don't do that, you're going to get left behind.
Yeah. Well, if you get to be 45 or 50, you become expendable. And I've
Yeah.
seen that happen to my dad. I've seen a lot of gentlemen that get to be, their late 40s and even into the mid 50s, and they get let go all the time because they become too costly and they can get somebody around 30 30 age of 30 for half the price and now you're left out. What do I do? And I warn gentlemen this all the time, even women, when you get to be in your late 40s and mid 50s, if you are not looking to be an entrepreneur to sell your skill set on your own as an independent contractor, you're going to find yourself out on the street or you're going to be so politically oppressed that you will never find the joy that you found by expressing the things you've been researching all these years.
Yeah, absolutely. And I think a lot of times, it's just it's I know for me, and I don't want to blame anything on the external. I try to own my own, right? Everything, all my decisions, everywhere I'm at, this was my problem that I had faced. But ultimately, most people are a victim of their circumstances and they really just have a scarcity mindset. They don't understand the abundance mindset. And when you're stuck in a scarcity mindset of survival, your ego ends up trying to prove that to you. And so you look for evidence of it, which ends up actually taking the energy away from being able to pursue excellence and pursues that of essentially failure because there's nothing there that can actually provide you with any kind of usefulness. I mean, there might be some sort of level of protection, maybe, but even that is like, it's the fear, uncertainty, and doubt that's really coming from that. And so when we start to look at it in a much different fashion, like even the idea of a political mindset that's holding me down is going to then leave you depleted of the ability to then say, I can work in this environment. It
Mm.
sucks, right? It could be better, you know, like
Right.
but to understand that regardless of what they are doing, I'm doing it, right? Like they're irrelevant to me. They do
Right.
make the situation difficult, and I can complain about that, but that's, everybody has to deal with it. So, it's
Mm.
easier to move on. So this is how, like, I think a lot of people will end up raised, right? They were literally a victim of their circumstances, raised with this familiar energy of depletion, of scarcity, of harshness, and instead of being in the mindset of no, it's all out there. Money flies everywhere. You just got to learn how to reach out there and grab it. See, even
Right.
for me personally, like I have no business being in the macroeconomics place. Like none. Like I have no education in it. I have no financial background, not a person from business. I'm not a family of wealth. I have nothing like that. That's not me. I'm just an average everyday dude.
Mm.
But I did a lot of research. On top of that, I also like to be in like the entertainer. Like I did, acting. I like to do the hosting of the bingo show. I like to, come out here and make videos and stuff. So I really like being in that entertaining field, but I also like to be informative and useful. And between these two, I was able to use that skill, right? And
Right.
create the channel and not only be entertaining, but hopefully be useful. And I use the profits from that to invest and do things that are benefiting my life. Try to keep my expenses low. Like this is my style of doing it. A lot of people say, dude, you should be building houses. You should be doing this. You should be doing all these other things. And I'm like, yeah, I did that a lot. And it's a lot of work and it's a lot of fun and stuff. But I really like telling jokes and, and
Yeah.
researching. And then, like I like putting my efforts towards these sort of things. Not saying that I don't mind building and I wouldn't mind building a house again, but I don't want to put my efforts towards something that is not necessarily my passion, right?
Right.
Coming out and talking and stuff and being in, I, I hate to say it, it's sort of like, but being on stage, right? Like I like that feeling to be able to take somebody's attention away from what it is that they have been focused in on, stressed out about, deliver them some sort of entertainment or maybe even some information that they can then walk away with. Man, I did my job. Like that to me feels good. That feels inspiring to me.
No, I really appreciate your stories, and we're gonna have to do this again sometime.
Oh yeah,
Uh,
absolutely.
any last thoughts on if you were to give a person who's thinking about building their own home any kind of thoughts or advice, what would you give them as the last thing for today?
Um, you know, Anybody who's considering buying a house or building a house is probably going to go through a lot of worry about it.
Mm.
And I know for me, it was probably one of the most stressful events that I had ever gone through attempting to buy this house. I really felt forced into it. I felt like it was taking too much money. I didn't think it was going to be the right deal. Everything about it was wrong. I talked to my buddy. I'm wearing my buddy lumberjack landlord here. His name's Matthew. He's a great friend of mine. I was telling him that story. He has a bunch of houses, 150 properties or something of that nature, right? 150 doors. And he says, dude, he goes, man, my first house, you explained it very similar to the situation I was going through. And I'll tell you what, man, I faced that with every single house that I was purchasing. And on the 40th house, I still felt that way, man. I felt like this is going to be the deal that takes me down. I'm not going to be, it's going to fail me. It's going to be the whole thing. And it's all going to come undone with this one property. It's going to screw me up. He says, but after 40, he says, it's not so bad. He says, after about 40 properties, he says, you kind of get used to that feeling. It's not so bad anymore. You're going to be everything. Like these are major things going down, especially like the construction of a home. And especially if it's like your very first property, it's going to be so much, unknown out there with it. Me, I look at like I put meaning behind it that gives us something better to look at. Not like, oh my gosh, it's just going to fail me, but I'm putting a product out right now when other people are not putting it out. Like, think about that. I'm
Yeah,
building a product when nobody else is doing it.
that's right.
Hey, that's a smart move, right? Like,
Yeah,
I mean,
very
if you
smart.
here something's in demand and not a lot of people are building it. Well, that's like, that's go forward, right? I mean,
Yeah.
that's like straight up off of that. Anytime you've ever asked anybody when was the best time to buy a house, same time it was to plant a tree 20 years ago, right? So in 20 years, you're not going to be asking this question anymore,
Right.
you know? So I think to myself, man, there has never been a time in history in which that mankind wasn't trying to put some sort of structure together, right?
Mhm.
So, no matter what, right? There was
Right.
they were trying to do it. So for me personally, I wouldn't necessarily worry about the economic conditions that are out there as much as it is your capabilities of getting it done. Right? Can
Right.
you do it today? Don't think about what it is that could possibly come, but can you make this thing happen? Do you have the financing to it? Do you have the skills? Do you have the network lined up for it? If you feel good about that, man, go for it because you're going to find complications. It's going to take place. But
Yeah.
that's me. Like I look at it in that fashion. If it's something that you're looking at the macroeconomics to say, oh man, should I? And it's now a timing thing. And I'm like, man, nobody ever times the market right.
No.
Never,
No.
never, ever, ever does anybody do it. Like some people got lucky and like, I really timed the market. It was like, okay, yeah,
Yeah.
it was like, so you say so, you know?
No, I appreciate your time. We'll have to do this again, Ken,
Yeah,
sometime. But we'll put this out to the next week, and I'll give you a link and I'll share
yeah,
that with you. But hey, thanks, Simon, for being on
you bet.
our show today. This is going to help a lot of students out there get a macro and even personal stories as to where you've been through. So we appreciate it
Okay.
much.
Well, thank you very much for having me on, man. I really appreciate you.
Okay, you take care.
You too.